Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin has recovered roughly 10,000 USD over the past 10 days. However, this move can hardly be called a true correction. Digital gold is still much closer to resuming its decline than starting a meaningful recovery. At this stage, the market looks more like a range or a setup for another sharp sell-off. The crypto community remains divided. Traders see a clear downtrend. Investors are moving into safer assets amid US political instability and geopolitical uncertainty. Companies are losing capital and investors. Meanwhile, some experts continue to insist that Bitcoin will print a new all-time high this year. The reason is simple. They need fresh demand and new capital to push the market north again. On the daily timeframe, Bitcoin remains in a confirmed downtrend. The structure is bearish, and the key CHOCH level stands at 97,900 USD. Only a sustained move above this level would signal a potential trend reversal. The original sell signal was confirmed inside the bearish FVG between 96,800 and 98,000 USD, giving traders the opportunity to capture the entire downside move. The current target remains 57,500 USD. Since there are still no reversal signals, we expect the decline to continue. The nearest daily sell-side zone of interest is located between 79,500 and 81,100 USD, though price has yet to reach that area. On the 4-hour chart, the bearish structure also remains intact. The CHOCH level is at 90,560 USD, and only a move above it would suggest a shift to a bullish trend. So far, the bullish IFVG has produced no meaningful reaction. The latest bearish pattern also failed to trigger momentum. A new bullish FVG was formed last week and could, in theory, spark a minor bounce. But technically, the market currently looks more like consolidation within a broader downtrend. Ethereum has slightly recovered over the past week, but the daily chart clearly shows that this rebound is purely nominal. We're facing a tricky situation. The upper correction is too weak to foil another major sell-off, yet the market also lacks the strength and a conviction to push Ethereum or Bitcoin into a sustained recovery. On the daily timeframe, Ethereum remains in a confirmed downtrend. At the start of the latest decline, ETH didn't generate a direct sell signal, but Bitcoin did, and that signal was fully applicable to Ethereum. Right now, there are 3 bearish FVGs on the daily chart. all of which may serve as potential zones for new short positions. The nearest and most significant one lies between 2480 and 2630. The key CHOCH level stands at 33.95, marking the latest lower high. As long as the price remains below that level, the bearish trend stays intact. If a correction is underway, it could turn into long, exhausting greens rather than a strong recovery. On the 4-hour chart, the recent collapse is clearly visible, followed by what looks like a weak corrective phase. During the last leg down, 3 bearish FVGs were formed. The second one was technically respected, allowing traders to open intermediate short positions. At the moment, price is compressed between a bullish and bearish FVG. Whichever side triggers a reaction will likely determine the next directional move. If we talk about longs, they should be approached with extreme caution, as the broader structure still favors the downside. That's all for today. See you online soon, and good luck.